Very good morning to all of you, my friends. Welcome back. I hope you guys are doing good. So, today we are starting with a new chapter, that is marginal costing from examination point of view. This chapter is very important. Just like standard costing, in every attempt, you will find questions on marginal costing. Very good morning, Preeti. Very good morning, Mr. Mallu Jadar. Very good morning, Sushil. So I hope you guys were able to solve the questions on standard costing. Good morning, sweetie. So I hope you guys were able to solve questions on standard costing. So now let's start with marginal costing. Again, just like standard costing, it's a part of management accounting and it assists management in decision making. This chapter has nothing to do with cost calculation. जैसा कि हमने स्टैंडर्ड कॉस्टिंग में पढ़ा था कि दिस स्टैंडर्ड कॉस्टिंग टेक्निक हेल्प अस टू फिगर आउट दैट प्रॉब्लम कहां चल रही है एंड हु इज द पर्सन, हु इज द व्हाट आर द रीजन बिहाइंड these problems or variances. That also standard costing help us to figure out. So this is all what we discussed in standard costing. So in standard costing also it was like there is nothing relating to cost calculation. So when talking about marginal costing also, again it's a part of management accounting and it assists management in decision making. Now, before starting with the full-fledged chapter, let's discuss few concepts, wherein the first concept is marginal cost. When talking about marginal cost, it's the cost of producing one additional unit. What is marginal cost? The cost of producing or manufacturing additional unit. Let's say I manufacture 10 units and the cost is 100. If I manufacture 11 units, let's say the cost is 110. So here in rupees 10 is what? My marginal cost. Another example, let's say I manufacture 100 units and the cost is 1000. If I manufacture 101 unit and if the cost goes to 1050, herein also rupees 50 is what? The cost of producing one additional unit. So it can be what? Marginal cost. But in more or less cases, marginal cost per unit will always remain constant. But yes, in extreme situation, it can vary, but due to some or other reasons. So this is all what about marginal cost, that is the cost of producing one additional unit. Another term is variable cost. I'm discussing few concepts before starting with the full-fledged chapter. For the students who have joined a bit late, we are starting with marginal costing, wherein the first point what I've discussed is marginal cost. The cost of producing one additional unit is marginal cost. Now, next point is variable cost. We can use marginal cost and variable cost interchangeably while solving practical question. But when talking about variable cost, what is variable cost? The cost that varies according to production. ये वो cost है जो production के हिसाब से vary करता है. If there is more production, the more will be the variable cost. If we are producing less number of units, less will be the variable cost. And if we are not manufacturing any unit, then there will be no variable cost. So when talking about variable cost, what is variable cost? The cost that varies according to production. The cost that varies according to production. Let's say I manufacture 10 units, the cost will be 100. If I manufacture 20 units, the cost will be 200. If I manufacture 5,000 units, the cost will be 50,000. If I manufacture 6 lakh units, the cost will be 60 lakh. And if I manufacture 0 unit, the cost will be 0. So it increases as per the production. In general, the variable cost per unit always remain constant. That is, इधर आप देख सकते हैं कि herein the cost per unit is same, that is rupees 10. So in short, what is variable cost? The cost that varies according to production. Very good morning, Sujay. Now, when talking about the examples of variable cost, the best example is raw material. Let's say I'm the manufacturer of plastic pens. Now, these marker pens are made up of what? Plastic and ink. So, अगर ज्यादा पेन्स मैन्युफैक्चर करेंगे तो ज्यादा प्लास्टिक इंक लगेगा, कम मैन्युफैक्चर करेंगे तो कम प्लास्टिक और इंक लगेगा. एंड इफ यू आर नॉट मैन्युफैक्चरिंग एनी पेन तो कोई भी रॉ मटेरियल नहीं लगेगा. Another example, let's say I'm the manufacturer of shirts, and to manufacture one shirt we need 2 meters of fabric. To manufacture one shirt, we need 2 meters of fabric. So if we want to manufacture 10,000 shirts, we will need 20,000 meters. If I want to manufacture 5,000 shirts, I'll need 10,000 meters of fabric. If I want to manufacture 15,000 shirts, I need 30,000 meters of fabric. So जैसे जैसे production बढ़ेगा उसी proportion में raw material cost भी बढ़ेगा. So when talking about the examples of variable cost, the best example is raw material. It can be labor also. Further, it can be other variable overheads also. So what is variable cost? The cost that varies according to production. Another term what we will be using throughout the chapter is fixed cost. When talking about fixed cost, very simple, the cost that remain fixed irrespective of production. What is fixed cost? The cost that remain fixed irrespective of the cost that will remain fixed irrespective of production. Let's say I manufacture 10 units and the cost is 1 lakh. If I manufacture 5,000 units also, the cost will remain same, that is 1 lakh. If I manufacture 10 lakh units also, the cost will remain unchanged, that is 1 lakh. And if I manufacture 0 unit also, the cost will be same, that is 1. So herein, irrespective of production, this cost will always remain fixed. When talking about the examples of fixed cost, it can be rent. Let's say I've taken a factory on rent, and the rent is, let's say, 5 lakh rupees per month. Now, अब चाहे मैं products manufacture करूं या ना करूं, whether I do manufacture products or not, my rent is fixed, that is 5 lakh rupees. So rent can be an example of fixed cost. Apart from this, we can say salary, depreciation, etc. So fixed cost is the cost that remain fixed irrespective of production. If you guys have any doubts in this part, you guys can please post your queries. Further, I request you guys to copy this explanation. So now let's start with the chapter that is marginal costing. Now, when talking about this chapter is based on 5 terms. That is sales. If we subtract variable cost from sales, we'll get a term, we'll get contribution. Let's say my sales is 200. My variable cost is 120. Therefore, my contribution will be 80. Further, if we subtract fixed cost from contribution, we'll get the final amount, that is profit. So this marginal cost is based on 5 terms, that is sales. If we subtract variable cost from sales, we'll get contribution. From contribution, if we subtract fixed cost, we will get profit. So these are the major 5 terms what we'll be using in marginal costing. पूरा marginal costing जो है ये 5 terms के ऊपर based. So we can say when talking about the formula for contribution, we'll write it as C only. When talking about the formula for contribution, we can say it is sales minus variable cost. That is, let's say my sales is 200 minus 120, we will get 80. Another formula for contribution can be fixed cost plus profit. So it can be 80 is equals to 40 plus 40. When talking about the total cost, it can be variable cost plus fixed cost. If examiner asks us to calculate profit, we can say sales minus total cost can be profit. So ultimately, you should know how to adjust these 5 terms. It can be anything, n number of formulas can be prepared using these 5 terms. So the point is, you have to stick to these concepts, that is 5 terms, that is sales minus variable cost, sales minus variable cost, that is contribution, contribution minus fixed cost, that is profit. Now, can you be please, hello, Miss Vismaya, can you be please more clear what exactly you want me to explain? So now the first question what the examiner do ask in general is PV ratio. In marginal costing, the first question what the examiner generally do ask is PV ratio. That is profit volume ratio. In every question, you have to calculate PV ratio by default. चाहे examiner पूछे, चाहे नहीं पूछे, in most of the cases, you will need PV ratio. When talking about how to calculate PV ratio, it's very simple. It is contribution divided by sales into 100. When talking about the formula for PV ratio, it is contribution divided by sales into 100. So let's say if my contribution is 80, my sales is 200. If we multiply it by 100, we'll get 40%. So this is what my PV ratio. So what it means basically, in simple terms, we can say what is PV ratio? The percentage of contribution to sales. What is PV ratio? In simple terms, we can say what is PV ratio? The percentage of contribution to sales is what? My PV ratio. That is मेरा जो contribution है वो मेरी sales का कितना percent है? The term is known as PV ratio. Let's say if my contribution is 100. Let's say if my contribution is 100 and my sales is 200. My PV ratio will be how much? 50. Let's say my contribution is 20 and my sales is 200. It means what? My PV ratio is 10%. Let's say my contribution is 50 and the sales is 200. It means what? 50 divided by 200 into 100, that is 25%. Let's say my contribution is 2000 and my sales is 10,000. It means what? My PV ratio will be what? 2000 divided by 10,000 into 100, that is 20%. So this is all what about PV ratio. What is PV ratio? The percentage of contribution to sales. Let me discuss few examples on PV ratio. Let's say my contribution is 2500 and my sales is 10,000. It means what? My PV ratio will be how much? 2500 divided by 10,000 into 100. So this will be 25%. It means what? जो contribution है वो मेरी sales का 25%. Another example, let's say my sales is 50,000 and my PV ratio is 40%. My sales is 50,000 and my PV ratio is 40%. It means what? Contribution जो है sales का कितना percent है? 40%. My contribution is 40% of sales. So it means what? My sales is 50,000. So how much will be my contribution? 40% of 50,000. So 50,000 into 40%, that is 20. When talking about the meaning, what is PV ratio? The percentage of contribution to sales. That is जो हमारा contribution है हमारी sales का कितना percent है? That PV ratio, उस term को हम लोग क्या बोलते हैं? PV ratio. What is PV ratio? The percentage of contribution to sales. जैसे आप 11-12 में आप GP ratio या ratio analysis में आप GP ratio calculate करते हैं. That is gross profit ratio. That is the percentage of gross profit to sales is GP ratio. So herein, the percentage of contribution to sales is the term what we call as PV ratio. Let's take one more example wherein, let's say my contribution is 1,20,000 and my PV ratio is, let's say, 30%. Can we calculate sales? Waiting for your answers, guys. I request you guys to please post your answer. Let's say my contribution is 1,20,000. My contribution is 1,20,000 and my PV ratio is 30%. It means what? That is, this 1,20,000 is 30% of sales. So you have to calculate sales. So what will be the sales? Waiting for your answers, guys. Very good, Preeti. Correct answer. Mr. Mallu, your answer is incorrect. You have to calculate a figure जिसका 30% जो है 1,20,000 होना चाहिए. You have to calculate an amount whose 30% is 1,20,000. Yes, Mr. Sayanto, waiting for your answer. So I've got answer from Unni Krishnan. It is correct. Sweetie Kumari, it is correct. Khushi Surotia, it is correct. Yes, Sushil and Sujay, Manna, waiting for your answer. Vismaya, waiting for your answers. You have to calculate a figure whose 30% is 1,20,000. Yes, Mr. Sayanto, waiting for your answers. Mr. Mallu, your answer is incorrect. Try to post correct answer, Mr. Mallu. Okay, so your answers are correct, Sujay and Sushil. So at the end of the day, we have to calculate a figure whose 30% is 1,20,000. So in simple terms, we can say what will be the sales? Very simple. My contribution is 1,20,000. That is 30% of sales. So how much will be 100%? 4 lakh. Let's take one more question, wherein let's say my variable cost is 1,80,000 and my PV ratio is 25%. So how much will be my sales? Mr. Sujay, it's not 40 lakhs, it is 4 lakh, my dear. What will be the sales in this case? Yes, sweetie, your answer is correct. Very good. Yes, Preeti, Mallu, and Sayanto, waiting for your answers. Sushil, correct answer. Sweetie, correct answer. Preeti, Mallu, and Sayanto, waiting for your answers, guys. Sayanto, your answer is incorrect. Please check. Sushil, your answer is correct. Sweetie, your answer is correct. Yes, Khushi. Yes, Unnikrishnan, waiting for your answer. Mr. Unnikrishnan, your answer is incorrect. It's a very simple question. Yes, Khushi, waiting for your answer. Sujay, Manna. Still, I have not received answer from you, Preeti. Mr. Unnikrishnan, your answer is incorrect. See, the concept is very simple. So herein what we can see is that the sales is divided in two parts. In simple terms, we can say my sales is divided into two parts. So herein in this case, my sales is 200. If we deduct variable cost, we will get contribution. See here in this case, my sales is 200. If my variable cost is 120, it means my contribution will be 40. So here, sorry, 80. It means my contribution is how much? 40% of sales. We call it as PV ratio. So if the contribution is 40% of sales, it means what? Variable cost will be 60% of sales. So if the contribution is 30% of sales, it means variable cost will be 70% of sales. So herein, my variable cost is given, that is 1,80,000. Now herein the percentage of contribution to sales is given, that is 25%. हम लोगों को वेरिएबल कॉस्ट कितना परसेंट है सेल्स का नहीं दिया हुआ है, बट कंट्रीब्यूशन कितना परसेंट है वो गिवन है. So it means if my contribution is 25% of sales, then my variable cost will be 75%. If my contribution is 25%, it means my variable cost will be 75% of sales. So this 1,80,000 is 75%. So how much will be 100%? 1,80,000 divided by 75 into 100. So this will be 2,40,000. Now it is correct, Preeti. Now it is correct, Mr. Sayanto. Very good. So the concept is very simple. If the contribution is 25% of sales, it means the variable cost will be 75% of sales. Okay, last question for you guys. Let's say what will be my variable cost? My contribution is 90,000. My variable cost is 70% of sales. So what will be my contribution? Waiting for your answers. Okay, very good, Preeti. Your answer is correct. Yes, sweetie, Sushir, Mr. Unikrishnan, waiting for your answers. Okay, so I've got answer from Kushi, Sushil, Unikrishnan, Sweetie. All your answers are correct. Very good, guys. Yes, Mr. Sayanto, waiting for your answer. Here in C, my contribution is 90,000. It means my variable cost is 70%. So PV ratio will be 30%. Therefore, my sales will be how much? 90,000 divided by 30%. So 3 lakh. So my contribution will be 3 lakh minus 90,000. Sorry, my variable cost will be 3 lakh minus 90,000. That is 2 lakh 10. So this is all what about PV ratio. Wherein what is PV ratio? It shows that contribution जो है हमारी sales का कितना percent है. This is all what about PV ratio. I'm giving you 2 to 3 minutes time to copy this explanation. Thereafter, we'll discuss one more point related to PV ratio. So giving you 2 to 3 minutes time, please copy the explanation. The variable cost is 2,10,000, Sujay. Now let's take one more question. Let's say I manufactured and sold 500 units at the rate 10. So the total is 5,000. When talking about variable cost, the variable cost is 7 rupees per unit. So this will be 3,500. Therefore, my contribution will be 1,500. And my contribution per unit will be 3. Now, in this case also, my PV ratio will be same. That is 1,500 units. Sorry, 1,500 is my contribution divided by my sales into 100. So 1,500 divided by 5,000 into 100. So that is 30%. Now, let's say instead of 500 units, we manufacture 600 units. Instead of 500 units, let's say if we manufacture and sell 600 units, my question is, क्या मेरा PV ratio change होगा या नहीं होगा? My question is the PV ratio going to change or not? So the answer is no. Let's see how. 600 into 10, 6,000, 600 into 7, 4,200. So this will be 1,800. Again, 1,800 divided by 5,000 into 100. So this will be 30%. So let's say if I manufacture 1 unit and sell 1 unit also, my PV ratio will remain unchanged. So in simple terms, if the sales quantity is increasing or if the sales quantity is decreasing, if the sales quantity is increasing or decreasing, the PV ratio will remain unchanged. Now, the point is that this relationship is constant. That's why the PV ratio is not changing. That is, the selling price per unit, the variable cost per unit is unchanged. That's why the PV ratio is constant. So herein, let's say if there is any change in selling price per unit, let's say instead of 10, let's say I reduce my selling price by 10% and my revised selling price is 9. So my revised contribution will be how much? 2. So is the PV ratio going to change? Yes, the PV ratio will change because 2 by 9 into 100 is not 30%. ये 30% नहीं है. So the point is this relationship should be constant. That is, the if there is any change in selling price per unit or variable cost per unit, then only the PV ratio will change. Else, if there is any change in sales quantity, if the sales quantity is increasing or if the sales quantity is reducing, the PV ratio will remain unchanged. So now, in general, what happens? If the sales is increasing, we will assume that the sales quantity are increasing. If the sales is reducing, it means we assume that the sales quantity are reducing. So the point is, very important point, the basic assumption what we have to follow is that PV ratio remain constant at all the level of sales. I repeat again, the basic assumption what we have to follow is that the PV ratio will remain constant at all the level of sales. However, if the question clearly states that there is a change in selling price per unit or variable cost per unit, then only the PV ratio will change. So I repeat again, very important point. If the question is silent, we will assume that PV ratio is unchanged. However, if question clearly states that there is change in selling price per unit or variable cost per unit, then PV ratio will change. So in simple terms, if the question is silent, sales बढ़ रहा, it means what? The quantity is increasing. PV ratio will never change. So, one second, sorry. So in simple terms, if the question is silent, it means what? If the question is silent about selling price per unit or variable cost per unit, it means they are constant. Therefore, the PV ratio is also constant. If the sales is increasing, we will assume that the quantity is increasing. If the sales is reducing, we will assume that the quantity is reducing. It means what? In simple terms, PV ratio will never change. PV ratio will remain unchanged at all the level of sales. If you guys have any doubts or queries, you guys can please post your queries. Further, I request you guys to please copy this explanation. I'm done with the PV ratio part. Now we are done with the PV ratio part. Now let's proceed further with the next part of the chapter, that is break-even sales. When talking about break-even sales, it is that level of sales where there is no profit and no loss, or we can say sales is equals to total cost. What is break-even sales? Or we can say sales is equals to total cost. So break-even sales is that level of sales where there is no profit or no loss. Further, we can say the point where the sales is equals to total cost is what my break-even sales. Let's discuss this concept with the help of an example. Let's say it's the same. My sales is 200. My variable cost is 120. Therefore, my contribution will be 80. Let's say my fixed cost is 40. Therefore, my profit will be 40. Now, the relationship between contribution and sales, we call it as PV ratio. That is the relationship between contribution and sales. We call it as PV ratio. That is, my contribution is 80. My sales is 200 into 100. Therefore, it will be 40%. It means what? Whatever the sales is, 40% will be the contribution and 60% will be the variable cost. This relationship will remain unchanged. Now the point is we have to calculate that level of sales where the sales is equals to total cost, or we can say there is no profit, no loss situation. Now, काफी स्टूडेंट्स ऐसे सोचते हैं कि सर वी हैव टू कैलकुलेट अ सेल्स where the sales is equals to total cost. So we can say if the sales is 120 plus 40, that is if the sales is 160, it means what? It is break even sales. But this answer is incorrect. Why? I repeat again, many students think that sir you said that at the see the break even sales is that level of sales where the sales is equals to total cost. So let's say my total cost will be 120 plus 40, that is 160. So this 160 will be my break even sales. The answer is incorrect. Why? Very simple, my dear. As I told you, this relationship will always remain unchanged. Now, here my sales is reduced from 200 to 160. It means my sales quantity is reduced. So it means my variable cost will also be reduced. So my revised contribution will be how much? 160 into 40. That is 64. My fixed cost is 40. So my profit will be 24. So herein what we can see is that the sales of 160, my profit is 24. That's why this is not my break-even sales. Now the question is how to calculate break-even sales. So herein, as I told you, that variable cost keeps on changing as per the production. Sales kam hoga to variable cost bhi kam hoga. Sales badhega to variable cost bhi badhega. But when talking about fixed cost, it remains constant at all the level of sales. So herein, let's say at break-even sales, how much profit we want? 0. Because it is that level of sales where there is no profit, no loss. So my profit expected is how much? My desired profit is how much? 0. Now fixed cost will always remain same irrespective of production. So my fixed cost I have already calculated, that is 40. Now this minus this should be 0. So my contribution should be how much? 40. Now this contribution is 40% of sales. As I told you, if the sales is reducing, it means the quantity is reducing. If the sales is increasing, it means the quantity is increasing. There is no change in selling price per unit or variable cost per unit. If the question is silent, it means what? The PV ratio is constant at all the level of sales. So it means what? This 40 is equals to 40%. So how much will be 100%? 100. Again, my variable cost will be 100 minus 60, 40. So this 100 is what? My break even. So ultimately, how we calculated 100? Very simple. My 0 is my desired profit at break even sales, plus 40 is my fixed cost. This is how we got 40. Now this 40 is equals to 40%. So how much will be 100%? 100 rupees. So this is how I calculated my break even sales. So when talking about 0 plus 40, it means what? My desired profit is 0, it has no value. So plus 40 is what? My fixed cost. And 40% is what? My PV ratio. So if we can directly calculate break-even sales as 40 divided by 40%, that is 100 rupees. This is how we can calculate our break-even sales. So this is the straight formula that is given in study material. How this formula is derived, that I have already discussed. If you guys have any doubts in this part, you guys can please post your query. So when talking about how this formula is derived, I have already discussed this concept. What's the formula? Very simple, fixed cost divided by PV ratio, that is break-even sales. What is break-even sales? That level of sales where there is no profit, no loss, or we can say sales is equals to total cost. If you guys have any doubts or queries, you guys can please post. Further, I request you guys to copy this explanation. Giving you 2 minutes time to copy this explanation. Please copy this explanation. Now let's take one more question. So herein, this much information is given in the question. So the first thing what we have to calculate is PV ratio. The very simple way, contribution divided by sales into 100. So my contribution is 1500 divided by 5000 into 100. That is 30%. Alternatively, we can say it can be 3 divided by 10 into 100. That is also 30%. So the relationship between contribution and sales is clear. Now, let's say if we have to calculate break-even sales, the very simple way, my desired profit is 0, my fixed cost is 900, therefore my contribution will be 900. My contribution 900 is equals to 30%, so therefore my sales is 3000. So herein again we have applied the same concept, that is fixed cost divided by PV ratio. That is fixed cost divided by PV ratio. So herein my fixed cost is 900 divided by my PV ratio 30%. That is 3000 rupees. Now see, my break-even sales is 3000 rupees and each unit is sold at the rate rupees 10. I repeat again, my break-even sales is 3000 rupees and each unit is sold at the rate rupees 10. It means how many units? 300 units. Since each unit is sold at the rate 10, it means my break-even point is what? 300 units. See, 300 into 10, 3000, 300 into 7, 2100. So 900 is my contribution, 900 is my fixed cost, and this is how we got zero profit. So this is what the concept of break-even sales. Now, herein we have calculated the break-even sales in units also. Now there is one more way to calculate break-even sales in unit. So let me discuss this part. See, let's say I'm the manufacturer of this pen. Now this pen is made up of rupees 7. Let's say to manufacture this pen, I have to spend rupees 7. I mean, to manufacture this pen, my variable cost is rupees 7. Now this pen is sold at the rate rupees 10. I repeat again, this pen is sold at the rate rupees 10. My variable cost is 7. It means per pen I am earning how much? 3 rupees. Per pen I am earning 3 rupees. Now, what will be my first target to recover my break even? To recover my fixed cost to achieve break even. So herein my fixed cost is 900. So ultimately I have to recover 900 rupees from the sale of this pen, and per pen I get rupees 3. So 3, 3, 3, 3. So it means what? If I manufacture and sell 300 pens, that is 900 divided by 3, that is 300 pens, we will get the break even sales. So we can say the alternate formula for break even sales can be fixed cost, that is the amount we need to recover after recovering the fixed cost, after recovering the variable cost, and after recovering the variable cost, we are earning rupees 3. So fixed cost divided by contribution per unit. So my fixed cost is 900 divided by 3, 300 units. So this is one more formula. What's the logic behind this formula? I have already discussed. I repeat again, this pen is manufactured at rupees 7 rupees. I mean, this pen is manufactured at a variable cost of rupees 7. It is sold at rupees 10. So after recovering variable cost per pen, I earn 3 rupees. Now my first target will be to achieve break even sales. That is, after recovering the variable cost, I have to recover my fixed cost also. So my fixed cost in aggregate is 900. So how many pens should I manufacture and sell so that at least I can earn 900 rupees so that there will be no loss? So per pen I am earning 3. In aggregate I have to earn 900. So 300 pens I have to manufacture and sell to achieve break even. So very simple. This is what the concept of break even sales in units also. So if we want to, now no need to do this exercise in exams. Simply Simply write the question like this, write the solution like this. When talking about if you are required to calculate break even sales in rupees, fixed cost divided by PV ratio. If you are required to calculate break even sales in units, fixed cost divided by contribution per unit. This is the straight way to write the solution in exams. If you guys have any doubts or queries, you guys can please post your queries. Further, I request you to please copy this explanation. So guys, we are done with break-even sales. So till now, what we discussed is the PV ratio, that is contribution divided by sales into 100. That is the percentage of contribution to sales. That is what we call as PV ratio. Thereafter, we started with break-even sales. Yeah, one more point. PV ratio will remain constant at all the level of sales. However, if the question clearly states that there is any change in selling price per unit or variable cost per unit, yes, the PV ratio will change. The next part, what we started is break even sales. When talking about break even sales, it is that level of sales where there is no profit, no loss, or we can say sales is equals to total cost. Now, how these formulas are derived, I've already discussed when talking about the formulas that are given in study material. If you want to calculate it in rupees, it is fixed cost divided by PV ratio. If you want to calculate it in units, it is fixed cost divided by contribution per unit. So this is all what about break-even sales. Now let's proceed with the next part of the chapter, wherein we'll be calculating desired sales. Let's say my sales is 200. My variable cost is 120. My contribution is 80. Sorry. Let's say my fixed cost is 40. and my profit is 40. The relationship between contribution and sales, we call it as PV ratio, that is 40%. Now in break-even sales, my desired profit was zero. That is, to get zero profit, how much sales is required? So very simple, what we did is fixed cost divided by PV ratio. But let's take a situation wherein some information is given in the question as regards my profit. That is, at least I want this much profit. So what should be the sales? I repeat again, let's say in this question only, let's say my desired profit is given. Let's say I want to earn a profit of rupees 160. So how much sales is required to earn this profit? So just like break-even sales, this part also we can easily calculate. See, in break-even sales, my desired profit was what? Zero. But herein, I have a desire to earn a profit of how much? 160. So this is what my desired profit. My fixed cost will always remain constant irrespective of anything. So this will be 40, this will be constant. So how much will be my contribution? Contribution minus fixed cost should be 160. So my contribution will be how much? 200. So to earn a desired profit of 160, we have to make a contribution of 200. Now the relationship between contribution and sales we have already discussed. That is what we call as PV ratio. So this 200 is equals to 40%. So how much will be 100%? Very simple, guys. That is 500. So this is what my desired sales. That is the sales to earn or desired profit. See, in break-even sales also, I applied the same way, that is reverse calculation, wherein in break-even sales, my desired profit was what? Zero. But here in question itself, it is given that if I want to earn a profit of 160, how much sales is required? Very simple. 160 is my profit. Fixed cost I have to recover. So my desired contribution will be 200. The relationship between contribution and sales, we call it as PV ratio that we have already calculated, that is 40%. So this 200 is equals to 40%. So how much will be 100%? Very simple, 500. So what we actually did, 200 divided by 40%. This is how we got this figure of 500. Now, how come this 200? 40 plus 160 divided by 40%. This is how I got this 500. Now, 40 is what? My fixed cost. 160 is what? My desired profit. Divided by 40% is what? My PV ratio. So when talking about how to calculate desired sales, this is the straight formula that is given in study material. How this formula is derived, I have already discussed. So when talking about if the desired profit is given and examiner is asking you to calculate desired sales, so the formula is straight away, that is fixed cost plus desired profit divided by PV ratio. As I said, there are no formulas in costing. But yes, we have to write exams, so we have to present the formula. So if the question is given, write the solution, write the formula, and calculate the final answer. No need to do this exercise. This exercise is just to explain you how these formulas are derived. So I repeat again, when talking about desired sales, very simple, fixed cost plus desired profit divided by PV ratio. My fixed cost is 40, my desired profit is 160 divided by 40%, will get our desired sales 500 rupees. So the concept is more or less same like break-even sales. In break-even sales, my desired profit was zero. Herein the desired profit is given in the question. If you guys have any doubts or queries, you guys can please post. Further, I request you guys to copy this explanation. Giving you 2 minutes time to copy this explanation. In the meanwhile, anyone having any conceptual queries or doubts, you guys can please post your queries. Let's take one more question. Now herein again we can easily calculate PV ratio, that is 1500 divided by 5000 into 100. Now let's say in question the information is given as regards desired profit, that is if I want to earn a profit of 3000 rupees, how much sales is required? Herein also we can easily calculate that this profit is my desired profit is 3000. My fixed cost is 900, so this will be 3900. This 3900 is equals to 30%. So how much will be 100%? 13,000 rupees. So again we applied the same concept, that is if you want to calculate desired sales in rupees, it's very simple, that is fixed cost 900 plus my desired profit plus my desired profit will get the desired contribution. This contribution is equals to PV ratio. So we can calculate the desired sales. That is 900 plus 3000 divided by 30%. That is 13,000 rupees. Now, since each unit is sold at the rate rupees 10, so we can say or 1300 units also. Since each unit is sold at the rate rupees 10, so we can easily calculate the number of units also. That is 13,000 is the total sales divided by selling price per unit, that is 10. We will get 1300 units. Now, alternatively, we can calculate the units directly also, just similar to the break-even sales in unit. So let's say this pen is manufactured at rupees 7, that is at variable cost of rupees 7, and sold at rupees 10. So in short, we are left out with rupees 3 after recovering the variable cost. Now, what is our target? First to earn 900 rupees, that is my fixed cost for break even. Now, apart from 900, I want to earn 3000 rupees extra. So, in short, I want to earn 3900. That is 900 towards my fixed cost plus extra 3000 for my profit. So, in short, I want to recover 3900 from overall sales, wherein after selling one pen, we are recovering rupees 3. So, to recover 3900, we have to manufacture and sell how much? 3900 we have to recover, divided by 3, that is 1300. What we will get, it is what the amount that the quantity of pens what we have to manufacture and sell to earn 3900. So here and directly we can calculate using this formula also. Again, the logic I have already explained. There is desired sales in units. If you want to calculate, that is fixed cost plus my desired profit divided by contribution per unit. My fixed cost is 900 plus 3000 I have to recover extra apart from 900, and per pen I am recovering rupees 3. So in short, if we manufacture and sell 1300 units, then we will be able to recover our fixed cost 900 plus we will get an extra profit of rupees 3000. So these are the two formulas that are given in study material that are related to desired sales if the desired profit is given in the question. If you have any doubts or queries, you guys can please post your queries. So when talking about desired sales, it's very simple. That is fixed cost plus desired profit divided by PV ratio. If you want to calculate it in rupees, fixed cost plus desired profit divided by contribution per unit if you want to calculate it in units. So I request you guys to please copy this explanation further. If you have any queries or doubts, you can please post. Giving you 2 minutes time to copy the explanation. So now we are done with PV ratio, break-even sales, and desired sales. Now let's proceed further with the next part. What examiners generally do ask is margin of safety. When talking about margin of safety in simple terms, we can say it shows how much we are safe from deadline of business. When talking about deadline, it talks about break-even sales. Let's say currently we are at 5,000 sales, and let's say my break-even sales or deadline is 3,000. It means how much safe I am? 2,000 rupees. So this is what my margin of safety. So when talking about margin of safety, we can say here we are. So this is what my actual sales minus deadline of business is what my break even sales. So this is what my margin of safety. Further, from actual sales, if we multiply by PV ratio, we get contribution. From actual sales, if we multiply it by PV ratio, we get contribution. Let's say my sales is 200, my variable cost is 120, my contribution is 80, my fixed cost is 40, therefore my profit is 40. 1 second, sorry. Let's take big figures. Let's say my sales is 5,000. My variable cost is, let's say, 3,500. Therefore, my contribution will be 1,500. My fixed cost is 900. Therefore, my profit will be 600. So here my PV ratio is 30%. So if I get a contribution of 1,500, it is divided in two parts, that is fixed cost and profit. So herein my fixed cost is 900 and my profit is how much? 600. So if we recover only our fixed cost, we achieve break-even sales. So herein my PV ratio is 30%. So if we recover only this much of cost, that is 900 only, we get our break-even sales, that is 3,000. But after recovering the fixed cost, the additional contribution what we earn is what we call as profit. So once my fixed cost is recovered, the extra contribution what we are getting is what? Profit. So to recover that profit, see this, my profit is 600. So to get this extra 600, how much additional sales we have made? 2,000. So this is what my margin of safety says. So margin of safety sales क्या बोलता है कि एक बार आप ब्रेक इवन अचीव कर लो, उसके बाद जो एक्स्ट्रा सेल्स होगी उससे जो कंट्रीब्यूशन आएगा वही प्रॉफिट होगा. सो दैट एक्स्ट्रा सेल्स इज व्हाट वी कॉल एज मार्जिन ऑफ सेफ्टी. And if we multiply this margin of safety with PV ratio, we will get the extra contribution over and above break even sales and over and above fixed costs. So that extra contribution is what? My profit. So there is one more formula we can say profit. If we divide by PV ratio, we will get that extra sales over and above break even sales, that is margin of safety. So when talking about one more additional formula, I have already discussed the concept. So one more additional formula we can say for margin of safety is what? Profit divided by PV ratio. If you want to calculate in unit, again the same way, profit divided by contribution. So here, see my actual sales is 5,000. My break-even sales is 3,000 and my profit is how much? Sorry, my margin of safety is how much? 2,000. So from this break-even sales, how much we earned only towards fixed cost? 1 second. This break-even sales is made to recover the fixed cost. Now, once the fixed cost is recover the extra contribution, what we get is what we call as profit. So to earn profit, we do make margin of safety sales. Further, one more point. Actual sales is divided in two parts, that is break even sales. जब तक आपका fixed cost recover हो जाता है, तब तक का sales break even होगा. Once you cross break even sales, the extra sales, what we make to earn profit is margin of safety. So here what we can see is that the margin of safety sales is 40%. Therefore, break even sales will be 60%. If the margin of safety sales is 30%, the break even sales will be 70%. If you guys have any doubts in relation to margin of safety or margin of safety sales, whatever it is, you guys can please post your queries. When talking about how to calculate while writing exams, margin of safety sales is actual sales minus break-even sales, or we can say profit divided by PV ratio. If you want to calculate in units, it is profit divided by contribution per unit. So whatever the queries you have, you guys can please post your queries. Waiting for your queries first. So Preeti, Mr. Mallu, Sayanto, any doubts in PV ratio, break-even sales, margin of safety sales, and desired sales? Yes, Mr. Mallu, Sayanto Sen, anyone? Sweetie, Mr. Unnikrishnan, Sushil Kumar. So let's summarize what we have discussed till now. When talking about marginal costing, this chapter has nothing to do with cost calculation. It's a part of management accounting and it assists management in decision making. Further, we discussed three terms, that is marginal cost, the cost of producing additional unit, variable cost, the cost that varies according to production, and the fixed cost, that is the cost that remain fixed irrespective of production. Thereafter, we started with the concept of PV ratio, that is contribution divided by sales into 100. That is contribution जो है हमारी sales का कितना percent है ये PV ratio बताता है. Further, if the question is silent, that we will assume that the PV ratio is constant at all the level of sales. However, if the question clearly states that there is a change in selling price per unit or variable cost per unit, yes, the PV ratio will change. Further, thereafter, we discussed break-even sales. Break-even sales is that level of sales where there is no profit, no loss, or we can say the sales where the point where the sales is equals to total cost. Further, we discussed two formulas also on break-even sales. Wherein if you want to calculate it in rupees, it is fixed cost divided by PV ratio. And if you want to calculate it in units, it is fixed cost divided by contribution per unit. Thereafter, we discussed desired sales, wherein if the desired profit is given in the question, and the question is asking us that how much sales is required to earn so and so profit. So when talking about desired sales, the formula is very simple, just a bit of change in break-even sales formula. So herein, the formula, if you want to calculate it in rupees, it is fixed cost plus desired profit divided by PV ratio. Further, if you want to calculate it in units, it is fixed cost plus desired profit divided by contribution per unit. The next part, what we discussed is margin of safety, that is safety margin, or we can say how much you are safe from deadline of business. When talking about deadline, it talks about break-even sales. That is, आप break-even sales से और कितना आगे तक safe है. Let's say my break-even sales is 3,000, and currently I'm on sales of rupees 5,000. It means still 2,000 I'm safe. From this 2,000, the extra contribution what we are earning is what we call as profit. So when talking about margin of safety, it's very simple. The sales over and above break-even sales is what we call as margin of safety. So the formula is actual sales minus break-even sales is margin of safety. Break-even sales से हमें जो contribution recover होता है, contribution आता है, that is used to recover the fixed cost only. But once you cross break-even sales, the extra contribution what we are getting from additional sales is what we call as profit. So there is one more formula what we can say, that is profit. If we divide it by PV ratio, we will get that extra sales over and above break-even sales, what we call as margin of safety. If you want to calculate it in units also, it is profit divided by contribution per unit. So this is all what about margin of safety. We are done with the basic part of the chapter. Still, if you guys have any queries, whatever the conceptual queries are, you guys can please post. I'm giving you 2 to 3 minutes time to post your queries. Or in the meanwhile, Manish sir, you can just unmute everyone for 3-4 minutes so that at least they can put up their queries. Ashok sir. आप सबको अनम्यूट कर दीजिए, किसी को भी कोई क्वेरी होगी तो पूछ लेगा. Supriti, Mallu, Sayanto, and there is one more person, I don't know. So if you have any queries, conceptual queries relating to marginal costing, the part till the part what I have discussed, then you guys can please post. Yes, Sushil, Sweetie, Unikrishnan, Sujay, Khushi. Anyone having any doubts or queries, you guys can please post your queries.
No, sir, all clear.
All clear? You are able to solve the questions on standard costing, Preeti?
Yes, sir.
Okay, fine. Perfect. Yes, Mr. Mallu and Sayanto.
Yes, sir. All clear, sir.
All clear?
Yes, sir.
You have already gone through my previous sessions, or it's like you are attending the sessions for the first time?
So I've been there for previous sessions as well, so all your previous sessions.
Okay, fine. Great. Fine, Mr. Mallu. So fine, let's take a break of 15 minutes. I'll be back after 15 minutes with the remaining part of the chapter, wherein we'll be discussing one more concept. If the 2 period figures are given, how to deal with it. Thereafter, we'll discuss few questions, random questions, for better understanding of the concepts. So let's take a break of 15 minutes. I'll be back after 15 minutes with the remaining part of the chapter. Ashok sir, you can put on the break. Thank you. Everything is going smooth. The break. Okay, fine. Welcome back, guys. So we are done with the basic concepts. Let me discuss one more concept, then I'll be discussing few basic questions so that you can have a better idea about how to approach the questions and all. So let's start with the next concept. So let's say the data is given 2023 and 2024, wherein sales is given 1 lakh and 2 lakh. My profit is given, that is 30,000 and 70,000. Now the point is how to calculate PV ratio and fixed cost. So here, if this type of information is given in the question, very simple, you can calculate PV ratio using change in profit divided by change in sales into 100. So here in the profit, there is a change in profit by 40,000 divided by change in sales is 1 lakh into 100. Therefore, my PV ratio will be 40%. Further, once the PV ratio is calculated, we can easily calculate the fixed cost also. My sales is 1 lakh and 2 lakh. So 1 lakh into 40%, that is 40,000. And this is 80,000. So this will be 60,000 and 1 lakh 20,000. How come 40,000? 1 lakh into 40%, 40,000. 2 lakh into 40%, 80,000. My profit is given, that is 30,000 and 70,000. Therefore, my fixed cost will be 10,000. And here also the fixed cost will be 10,000. So fixed cost will always be constant at all the level of sales. Let's take one more question. Where in 2023 and 2024, let's say the sales is given 1 lakh and 2 lakh, wherein profit is given, that is minus 10,000, that is in the first year there is a loss of 10,000, and in the second year there is a profit of 25,000. You are required to calculate the PV ratio. Can you guys please post your answer? What will be the PV ratio in this case? Waiting for your answers. Yes, Mr. Sayanto, Mallu, Miss Preeti, everyone waiting for your answers. What will be the PV ratio in this case? Sweetie, Sushil Kumar Barik. Very good, Preeti. Your answer is correct. Yes, Sayanto and Mallu, waiting for your answers. Mr. Unni Krishnan, waiting for your answer. Sweetie, your answer is incorrect. Sujay Manna, your answer is correct. Sushil and Unni Krishnan, waiting for your answers. Khushi, Sweetie, please recheck your answer. Your answer is incorrect, Sweetie. Sayanto, your answer is incorrect. I'm surprised your answer is incorrect. Mr. Mallu, waiting for your answer. So, Sujay, your answer is correct. Very good. Sweetie, Unni Krishnan, Khushi, and Sushil, waiting for your answers. Mr. Mallu, waiting for your answer. Sayanto, your answer is incorrect. And Sweetie, your answer is incorrect. Yes, Sweetie, now this time it is correct. So when talking about the change in profit, see, earlier there was a loss of 10,000. Now there is a profit of 25,000. It means the overall change is of 35,000. That is 25,000 minus 10,000 divided by 1 lakh. So minus minus it will be plus. So 35,000 divided by 1 lakh into 100. So 35%. Now it is correct, Sayanto. I request you guys to please copy this explanation. I'm done with this part. So please copy this explanation. So I'm done with the basic part of marginal costing. I have discussed all the concepts and the formulas, and I mean the concept behind these formulas also. Now let's discuss few practical questions, the basic practical questions for better understanding and more clarity of concept. So these are the 4 questions. Wherein the first question is sales 1 lakh, variable cost 70,000, fixed cost 12,000. You are required to calculate PV ratio, break-even sales, and margin of safety sales. In the second question, the selling price is 20, variable cost is 14, fixed cost is 7,92,000. You are required to calculate break-even sales in rupees and in units. Further, desired sales in units to earn a profit of 18 lakh. The third question is fixed cost 1,80,000, variable cost 70%, margin of safety 25%. Calculate actual sales and profit. The last question is selling price rupees 20, variable cost rupees 14, fixed cost 7,92,000. Calculate the number of units to be sold to earn a profit of 10% on sales. So those who are thorough with the concept, I'm giving you 10 minutes time to solve these questions and post your answers. So I request you guys to try to solve all the questions and post your answers. After 10 minutes, I'll be back with the solutions of these questions. So giving you 10 minutes time to test what you have learned in this session and try to solve the question and post the answers as fast as possible. So let's wait for 10 minutes for everyone. Those who are online or offline, whosoever it is, can please post your answers over the portal or you can post your answers over the Zoom. And let's see what you have learned from this session. And I'll be back after 10 minutes with the solutions. So let's start with these questions. So giving you 10 minutes time. In the meanwhile, those who are over Zoom, you can ask your queries also because I think now it's like, Edwin sir, everyone is on unmute now, na? You have granted the permission. अशोक सर सबको अनम्यूट कर दिया है ना आपने? Okay, so waiting for your queries also. In the meanwhile, you can start solving the question and start posting the answers. Question number 1, 2, 3, and 4. So very good, sweetie. All the answers are correct of question number 1. Sujay Manna, very good. Your answers are correct. Very good, Sujay. So I've got correct answers from Sweetie and Sujay for question number 1. Okay, so I've got correct answer from Preeti also. All the answers are correct. Very good, Preeti. Yes, Mr. Sayanto and Mr. Mallu, waiting for your answers. Very good, sweetie. I think your answers are correct. Of question number second also. Sayanto, be quick. Your answer is correct, but still, it's like, okay, so I've got answer from Preeti. I need to check the answers now. So these are the solutions of question number one. The point is the purpose of discussing this question is to show you that how to present the solution in exams. So just prepare this table. The first question is PV ratio, contribution divided by sales into 100. Second one is break-even sales, fixed cost divided by PV ratio. Third one is margin of safety sales, that is actual sales minus break-even sales. So the purpose of writing the solution is to show you guys how to write the solution in exams. Khushi, very good. Your answers are correct. I need to check the answer of question number three, sweetie. Let me check. Sujay, your answers are correct. I think still give me a minute's time. I'll check out your answers. Very good, Sayanto. Start with question number second. When talking about the solution of question number second, we'll first calculate PV ratio, that is contribution divided by sales into 100. So it is 20 minus 14, 6 divided by 20 into 100. So 30%. When talking about break-even sales in rupees, it is fixed cost divided by PV ratio. So it will be 7,92,000 divided by 30%. If you want to calculate break-even sales in units, it is fixed cost divided by contribution per unit. So this will be 7,92,000 divided by 6. This will be 26,40,000. This will be 1,32,000 units. Desired sales, fixed cost plus desired profit divided by contribution per unit. So my fixed cost is 7,92,000. My desired profit is 18 lakh divided by 6. This will be 4,32,000 units. So this is the way you have to present the solutions in exams. Khushi, you please check for question number 2. I think the desired sales, the question is asking you to calculate in units rather than rupees. So please check. Sujay Manna, you also please check your answer. The answer what you posted is incorrect. The correct answer is 4,32,000 units. Sweetie, your answers are correct. Very good. Let me check the answer of question number 3. Very good, Khushi. So this is the answer of question number 2. Those who want to copy the solution can please copy. Now solution number 3. Herein, the fixed cost is given, variable cost is given, margin of safety is 25%. You have to calculate actual sales and profit. So my PV ratio will be 30%. Since my variable cost is 70%, so the PV ratio will be 30%. Further, my break-even sales we can easily calculate. That is 1,80,000 is my fixed cost divided by 30%. So this will be 6 lakh. My break-even sales will be 6 lakh. Further, herein the margin of safety is 25%. Since margin of safety is 25% of sales, therefore break-even sales will be 75% of sales. So we have got 6 lakh, that is 75% of total sales. So my actual sales will be 8 lakh rupees. Therefore, margin of safety sales will be 8 lakh minus 6 lakh, that is 2 lakh. So if we want to calculate profit, we can simply multiply margin of safety into PV ratio. We'll get profit. So that is 2 lakh into 30%. So 60,000 will be my profit. So now let me check who posted the correct answer. So sweetie, all your answers are correct. Khushi, please check your answers were incorrect. No worries, Sujay, that's okay. Preeti, your answers are incorrect. Please check, Preeti. I request you guys to please check. See, guys, the fixed cost is 1,80,000. The variable cost is 70%. So if the variable cost is 70%, it means PV ratio will be 30%. So my break-even sales will be how much? 1,80,000 divided by 30%, that is 6 lakh. So 6 lakh is my break-even sales. Now here it is given in the question that the margin of safety is 25% of sales. Margin of safety जो है हमारा sales का 25% है. It means break-even sales will be 75% of the total sales. So break-even sales जो है वो total sales का कितना हो जाएगा? 75%. So 6 lakh is 75% of total sales. टोटल सेल्स का 75% 6 लाख है जो कि ब्रेक इवन सेल्स है. So 6 lakh divided by 75% will get the actual sales, that is 8 lakh. Now once the actual sales is calculated, you can easily calculate margin of safety sales. So margin of safety sales will be 2 lakh. When talking about the formula for margin of safety and concept, I have already discussed, that is profit divided by PV ratio is margin of safety. So if we multiply margin of safety with PV ratio, we will get the profit. So this is how this question is solved. So Preeti, I'm surprised your answers are incorrect. Very good, Mr. Sayanto, your answers are correct. Preeti, please recheck your concepts. Sweetie, very good, your answers are correct. Miss Khushi, you please check your answers were incorrect. Anyone have any doubts or queries? Then you guys can please post your queries. I'm done with question number 3. Okay, no worries. Still, if any doubts, then you can please ask. Yes, the practice is the key, Preeti. The more you will practice, the more you will be thorough with the concept. So I'm done with question number 3. Now question number 4. Wherein selling price is 20, variable cost is 14, fixed cost is 7,92,000. Calculate the number of units to be sold to earn a profit of 10% on sales. We have to calculate the number of units to be sold to earn a profit of 10% on sales. So let units sold be X. So my sales will be how much? 20X. That is 20 into X, the total sales. My variable cost will be 14X. Therefore, my contribution will be 6X. If we subtract our fixed cost, that is 7,92,000, we'll get our profit. And this profit should be 10% of sales. So if my sales is 20X, my profit will be 20X into 10%. that is 2x. So in short, 6x minus 7,92,000, we should get profit that is 2x. So 4x is equals to 7,92,000. So x will be 1,98,000 units. So if we manufacture and sell 1,98,000, in this case, we will get 10% profit on sales, the net profit on sales. Very good, Khushi. Now your answers are correct. I'm done with explanation of question number 4 also. If you guys have any doubts, then you guys can please post your queries. There is one more session, I think it is tomorrow, wherein I'll be discussing the questions relating to decision making, key factor, shutdown point related questions, sales mix related questions, and few more. So the point is that जब तक आपके basic concepts clear नहीं होंगे, you won't be able to understand the advanced problem or decision making problem. So I request you guys to revise what I have discussed till now and try to solve the basic questions, at least 10 to 12 questions. I mean, you will find it in study material, past practice manual. If you are doing any sort of graduation course, then you know in your graduation also this chapter is there, so you can refer any of the authors for solving the basic questions on marginal costing. At least try to solve 15 to 20 questions in writing, the basic questions, so that you can easily approach the decision making problems. So giving you 2 to 3 minutes time, you guys can post your queries relating to today's session. Very good, Khushi, all your answers are correct. So try to solve 15 to 20 very basic questions. It will be available in the study material also, past practice manual, plus you can refer any of your graduation level books also to solve the basic questions, so that you must, at least you can polish your skills as far as this concepts are concerned. Accordingly, thereafter in the next session, we'll start with the decision making problems. So be prepared for the next session. So anyone else having any doubts or queries, you guys can please post your query. Preeti, Sayanto, any doubts? Sweetie, Khushi, Sushil, Sujay, Unnikrishnan, Sushil, Vismaya, any doubts?
No, sir.
All clear?
Yes, sir. Only need some practice.
हाँ
Only need some practice.
या आपका कोई भी ग्रेजुएशन लेवल का बुक्स है तो आप उसमें से ट्राई कीजिए सारे बेसिक क्वेश्चन सॉल्व करने का, सो दैट आपके कॉन्सेप्ट्स क्लियर हो जाएंगे. Thereafter only I mean start solving the decision making problems. Preeti.
Yes, sir.
Yes, Sayanto, you want to say something?
No, sir. All clear, sir.
Okay. So
You
no worries.
explained
I mean,
nicely
try to
also.
solve as maximum as possible question in writing, the basic question, wherein PV ratio, break-even sales, margin of safety. I mean, these types of questions from your graduation level books or any of the authors. Whatever the authors you have. No need to buy a book separately for this chapter, but yes, you need to solve 15 to 20 questions at least of the basic questions, so that you'll get a better idea how to approach advanced decision making problems.
Okay, sir. Whatever sir you taught in class, the formulas that only learned up nicely, and the sums are pretty clear.
Yes.
Thank you, sir.
Yeah. Great, Sujay. Great, Khushi. So fine, be ready for the next session, that is the advanced decision making problem. I'll be discussing these problems tomorrow. So till then, at least revise what I have discussed and try to solve few questions. So it's already 9:30 and I think there are no more queries. So that's it for the day. Thank you for your time and patience and active participation in the session. In the next session, we'll discuss few problems on decision making. So thank you so much, guys. God bless you. Enjoy your day. Have a great day ahead. Thank you.
Thank you, sir.
Yeah,
Have a great day too, sir.
Yeah. Thank you.
Thank you, sir. Have a nice day.
You too, dear. Thank you. Ashok sir, I'm done. Admin sir, are you there? Yeah. Thank you, sir. Everything was smooth? Okay, fine, sir. Thank you. Ajit sir, are you there?